Okay, so we now move on to the activity-based costing. The activity-based costing, which is in the short form also known as ABC. Let's have a bit of a discussion about the activity-based costing, that what exactly is the background to activity-based costing and what is the significance of activity-based costing for this paper. From the examination perspective, let me just guide you that this activity-based costing is going to be tested as an OTQ. It could be part of section A in normal OTQs. It could be part of section B where you could be required to have a case OTQ. So it could depend upon what the examiner wants to do. Now, let's start discussing about the activity-based costing and let's see that what exactly it is all about. The background to activity-based costing is that whenever an organization operates, it incurs overheads. I repeat, whenever an organization operates, it incurs the overheads. And when it incurs the overheads could be categorized into the production-related overheads and into non-production related overheads. We have discussed this concept earlier that when we talk about the production-related overheads, the production-related overheads actually mean that they pertain to the production facility, like you've got machinery depreciations, you've got factory rent, you've got the security cost, you've got the supervision cost, etc., etc., etc. And when we talk about the non-production related costs, so that is other than production, which is marketing, admin, etc. We have discussed this thing that the non-production related cost is treated as a period cost, whereas the production related cost is treated as a product cost. Traditionally, what have been happening with respect to the organizations is that the organizations have been adopting the absorption costing. And with respect to the absorption costing, what is the organization, what have been the approach of the organizations? They have been absorbing the overheads to the part and parcel of the cost of the product using this absorption costing principles. Now, but over a period of time, what has happened is there have been changes with respect to the way the organizations operate. And when there have been changes with respect to the way the organizations operate, so the absorption costing started to become an obsolete method of absorbing the overheads. As a result of this, there was an introduction of the activity-based costing. And the major reason being that over a period of time there has been change. So when I compare a modern day organization with a traditional organization, what are the major differences that have been existing? Let me just guide you. Number one of them is, when we talk about the traditional organizations used to be like this, that they used to have a single product. They were operating with one single product. But when we talk about the modern day organization, we have got multiple products that the modern day organizations they offer. So you compare a traditional organization with a modern day organization, it is a comparison of a single product with multiple products. The second thing is that the traditional organizations had simple manufacturing processes. Why? Because the products were actually very simple, they were not complex. But when it comes to the modern day organizations, they have got complex manufacturing processes. What do we mean by having complex manufacturing processes? This actually means that the manufacturing process have got multiple steps, multiple stages, and it's not a simple product, it's a product that undergoes various stages, various steps, then ultimately the finished product is produced. Thirdly, historically the organizations were more labor intensive, they were not machine intensive. Over a period of time, the modern day organizations are more machine intensive. So when we talk about the modern day organizations to be more machine intensive, what does it actually mean? The modern day organizations being machine intensive, this means that the organizations are focusing more and more on machinery. So that means their overheads are now a larger proportion of the cost as compared to the traditional organizations. So because of these things, and because of one more reason, which is about the competition, traditionally the organizations had low competition and the modern day organizations have got high competition. The costing of the product becomes a very important thing. Why? Because if you cost the product correctly, you will ultimately be able to price it correctly. So if you cost the product inappropriately, you would ultimately be pricing it inappropriately also. So therefore, the costing of the product becomes a very important thing for any specific organization to operate. Now, the organizations used to adopt absorption costing, but the result of absorption costing was that the overheads were not allocated, the overheads were not absorbed in an appropriate manner. As a result of this, the activity-based costing was introduced, which is a costing method that focuses majorly on the different activities that are being undertaken in order to manufacture a product. I would list down a sample of activities that are usually are undertaken in order to manufacture a product. So that could be scheduling the machines, that could be setting up the machine, that could be inspecting items, that could be purchasing, receiving and handling materials, that could be handling large number of individual requests, etc., etc. Let me just guide you a bit. What we had been used to was the overheads divided by number of labor hours or number of unit or whatsoever that is. So we used to get an overhead absorption rate. Overheads divided by number of labor hours, we used to get the overhead absorption rate. Now when we used to get the overhead absorption rate, what used to happen was, try to understand something. When we used to get the overhead absorption rate, resultingly what used to happen was that this overhead absorption rate did not reflect the business operation in action. So as a result of this, I repeat, as a result of this, what happened was that this activity-based costing says that look, there are different activities that are being undertaken by the organization. So what you need to do is that you need to keep these activities in mind and you need to absorb the overhead on the basis of activities that are undertaken to manufacture a product. So when we implement the activity-based costing, there are certain steps that you have to follow in order to implement the activity-based costing. What are those certain steps? Let's discuss them one by one. The first of the step is to identify the activities. I repeat, the first of the step is to identify the activities. Now when we talk about identifying the activities, what do you mean by this? You as an organization undertake many activities, so identify all the major activities, like machine setup is one of the major activities, like ordering material is one of the major activity, things like that. The second thing that you have to do is that you have to develop the cost pools. What do you mean by cost pool? For every specific activity, you combine all the costs from here, there, etc., etc. So for all the activities, you combine all the costs from here, there together, and resultingly what do you get? You get a cost pool. The third thing is you identify the cost drivers. Cost drivers are the actions that actually lead to that activity. Like for example, machine setup cost is an activity. Now number of times that you set up a machine, that number of times of setting up the machine is a cost driver. You place orders of material, so number of purchase orders that you raise is actually an activity that's undertaken. So identify the activities, then develop the cost pool, which is combining the cost of those activities. The third step is to identify the cost drivers. And the fourth step is calculate activity overhead absorption rate. What do you mean by this? For every single activity, let's say if you've got 4 activity, you calculate the overhead absorption rate for activity 1, for activity 2, for activity 3, for activity 4. Every single activity you calculate the activity overhead absorption rate. And then once you have it, what you do is that you absorb the overheads into the product. How exactly are we going to do it? I'm going to demonstrate to you through 1 or 2 of the examples so that you could have an idea that what exactly is the approach. We have an example in front of us, which is question number 31 from the revision kit. It's an MCQ which we will use to help you understand the activity-based costing concept. It says a company which makes 2 products. What are the 2 products that the company makes? Alpha and Zeta. It uses activity-based costing to absorb its overhead. So what does it do? It absorbs the overhead using the activity based costing. It has recently identified a new overhead cost pool for the inspection cost. What it has done is that it has recently identified a new overhead cost pool for the inspection cost and has decided that the cost driver is the number of inspections. The following information has been provided. The total inspection costs are this. The production volume is 2500 for this, 8000 for this. Machine hours is this. Units per batch is this. Inspections per batch is this. Now the examiner's requirement to this question is, what is the inspection cost per unit of product alpha? What is the inspection cost per unit of product alpha? Now it's very simple. Just like you know with respect to absorption costing, here what you have to do is that the first thing you need to do is you need to calculate the total number of inspections. Till the time you don't calculate the total number of inspections, you won't be able to calculate the activity overhead absorption rate. Let's try to understand this. Basically, with respect to alpha, we know this thing, it's 4 inspections per batch, 500 units per batch. So 2500 is the number of units that are being produced. You divide it by 500, so what do you get? You get the number of batches. And for each batch, there are 4 inspections. So resultingly 2500 divided by 5 multiplied by 4 gives you 20 inspections. Similarly, when we talk about the zeta, what is going to happen with respect to zeta is 8000 divided by 1000. Why? Because for each batch you have got 1000 units. So 8000 divided by 1000 and then you multiply it with 1. So resultingly 8. So as a result of this, the organization, what it does is that there are 28 inspections that are being undertaken. Now what we would do is that we would calculate the cost per inspection. So when we are going to calculate the cost per inspection, it's going to be 250,000 divided by 28. What is it going to be? It's going to be 250,000 divided by 28, resultingly 8,928.6 is what the cost per inspection is. 8928.6 is the cost per inspection. Now let's just try to understand. What is the requirement? The requirement of the question is, what is the inspection cost per unit of product alpha? How would we know this? How would we know this, that what is the cost per inspection? Sorry, what is the cost per unit? So how would we calculate this? We would say, okay, we know the cost per inspection. Now we need to see the number of inspections for alpha. And we know it's 20. The total cost for this number of inspection, which is the total cost for this number of inspection is 178,571. I repeat, the total cost for this number of inspections is 178,571. Now, if I try to establish this cost per unit, so I would say 178,571 divided by 2500, because that's the number of unit. So resultingly 71.43 is the answer that I get. Now what exactly do we have to do with respect to this question was, it was a question in which they had given you inspection cost and you had to calculate the inspection cost per unit. Now let's move a bit forward. I'm going to do some calculation based questions and then I'll come back to the theoretical aspects also. Question number 33 is what we are going to do now. It says a company makes products A and B. It is experimenting with activity based costing and the production setup costs are $12,000. The total production will be 20,000 units of each of A and B. Each run is for 1,000 units of A or 5,000 units of B Using activity based costing, what is the setup cost per unit of A? Again, the first thing that you need to do is that you need to establish the number of setups. You know this thing, for each production run, 1000 units of A are there and 5000 units of B are there. So if you have got number of setup for A is gonna be 20,000 divided by 1000 gives you 20. For B, it is gonna be 20,000 divided by 5000 is equivalent to 4, so gives you 24. Gives you 24. Now, so the number of setups are gonna be what? 20 plus 4, 24 is the total number of setups. When we talk about the production cost, it says $12,000 is the setup cost divided by 24. So how much do you get? You get the cost to be $500 per setup. Now if I say multiply it with what? Multiply this with the number of setups, which is 20 for A, divided by number of units, which is 20,000. So resultingly, what is going to be the setup cost per unit of A? It's 500 into 20 gives you 10,000 divided by 20,000. So this actually gives you 0.5. This actually gives you $0.5. But the examiner's requirement is that you need to give your answer to the nearest cent. So what you need to do, you need to answer the question in terms of cents. So 50 cents is what the answer is going to be. Don't write down $0.5, write down 50 cents. What do you write down? 50 cents. This question number 35 is similar to the previous question, where you have been given production setup, you have been given total production is this of each unit, and each run is 2000 and 5000. So I am not doing it because it's more or less similar type of question. I am gonna move a bit forward onto something else. Now, I've got this question, which is question number 36. I'll do this question. Before I go on to do this question, let me read the requirement to the question. It says using a traditional method of overhead absorption based on labor hours. What does it say? Using a traditional method of overhead absorption based on labor hours. What is the overhead cost per unit for each unit of product alpha? The answer should be to the nearest 2 decimal places. Now let me just guide you something. When the examiner says give your answer to 2 decimal places, even if you have got $2 as an answer, you won't write $2. You would say 2.00, because he is asking you to answer the question to the nearest 2 decimal places. Now try to understand something. What does it say? It says ABC manufactures 2 products, which is alpha and beta. Both are produced in very labor intensive environment and use similar processes. And what do they use? They use similar processes. Alpha and beta differ by volume. What do? They differ by volume. Beta is high volume while alpha is low volume. Details of inputs, outputs, and the cost of activities are as follows. So you've been given the labor hours per unit, you've been given annual output, number of purchase orders, number of setup, etc. Fixed overhead costs amount to this 420,000 and have been analyzed as follows. Now, in this example, I'm being asked to calculate the cost using the overhead absorption based on labor hours. So that is a traditional absorption costing example. What is it? It's a traditional absorption costing example. Now when I talk about this traditional absorption costing example, I would say let's talk about this MCQ number 36. So what would happen is that you have got The budgeted overheads that you have got is what? Is $420,000. Then what happens is that you need to have the budgeted labor hours. What is going to be the budgeted labor hour? Let me just guide you. The budgeted labor hours are going to be, you have got 5 hours for alpha, you have got 5 hours per unit for beta. So you're simply going to do what? You're going to say 5 into 1200, 5 into 12,000. So here you get 6,000 hours, here you get 60,000 hours. 66,000 is your budgeted labor hours, right? Now, when we talk about the overhead absorption rate, so overhead absorption rate is going to be $420,000 divided by $66,000. What is it going to be? $420,000 divided by $66,000. So hence it is going to be $6.3636. When you're going to round it off, so you're simply going to make it $6.36. So the answer here is 6.36. Now, there was no rocket science involved. It was a basic absorption costing question. Let's move a bit forward and let's take things forward. Now the same example is now being repeated and the examiner says, using traditional method of overhead absorption, sorry, just a minute. 6.36 is not the answer, just a minute, sorry about that. It was an overhead absorption rate, and if we are going to talk about alpha, it has to be multiplied with 5. What do you need to do? It says per unit of alpha. So we have got 5 labor hours for alpha. This is going to be multiplied with 5, so 31.818, which is 31.82. That's what the answer is going to be. Now it says using the traditional method, what is the overhead cost per unit for each unit of product beta? So again it's going to be the same because the beta also consumes 5 labor hours per unit. Now the third is, he is now asking you activity based costing, and what you need to do is that you need to say what is the overhead cost per unit for each unit of product alpha. Now try to understand something. Basically we are being given these 3 activities. One of them is volume related, one of them is a purchasing related, and the third one of them is setup related. And these costs that have been accumulated, they are termed as cost pools. Now these are the cost drivers. These are the cost drivers. What are they? They are actually the cost drivers. What do you need to do? Try to understand something. You would simply do it like this. You would say, okay, we need to calculate the cost per activity. Now if you have to incorporate or if you have to apply the activity based costing to it, this is question number 38, right? So what would you do? You would say, okay, the first thing is volume related overheads that we have is 100,000. You divide it by the total units, which is 13,200. So hence resultingly what happens is 100,000 divided by 31,200, 100,000 divided by 13,200 is 7.575. That's number 1. What's number 2? You've got purchasing related. So the purchasing related is going to be on the basis of purchase orders. When you're going to talk about it, you would say 145,000 divided by number of purchase orders, which is 160. So resultingly, this is going to become 906.25. Then the third one of them is going to be setup related, which is 100 setups. $1,750 per setup. Now, what do we need to do? We need to actually calculate the cost per unit of product alpha. How would you do it? Try to see this. You would say, in order to do the calculations, we need to establish the total cost for alpha, and then we'll do the number of units. So the alpha related cost is like this. Volume related is 7.57. Volume related is 7.575 multiplied by what? Multiply by 1200. This gives you 9090. Then you have got purchase order related cost, right? So when we talk about the purchasing related cost, what is it gonna be? The purchasing related cost is, we have already calculated the rate, which was 906.25. What was it? It was 906.25. You multiply it with number of purchase orders, which is 75. So 906.25 multiplied by 75, 67969 approximately. Then the setup related cost, we know the setup related cost is what? Is 175,000 divided by 100 gives you 1750. So this 1750 multiplied by 40, which is the number of setups. Hence, it is gonna be 70,000. So basically what happens is that 9090 plus 67969 plus 70,000 gives you 147,059. This is the total cost that you are incurring for the product alpha. Now you divided by number of units of alpha. What are the number of units of alpha? The number of units of alpha are actually 1200. So when you divide it by number of units of alpha, which is 1200, so it's gonna be 122.549, or you could say 122.55. That's what the per unit cost of alpha is going to be. So 122.55 is what the answer is. How did we do it? We simply established the absorption, the overhead rate per activity, and then we did it on the basis of that. We'll move on to the next example. It says the company makes 2 products using the same type of material and skilled workers. The following information is available. Budgeted volume is this, budgeted volume is this. Material per unit is this, per unit is this. Labor per unit is this, labor per unit is this. Fixed cost relating to material handling is 100,000. Cost driver for these costs is the volume of material purchase. General fixed costs absorbed on the basis of labor hours amount to 180,000. Using the activity based costing, what is the total fixed overhead amount to be absorbed into each unit of product B? How would you do it? Again, you have the cost pool. This is cost pool 1, this is cost pool 2. So what do we need to do? We need to calculate budgeted material cost, which is gonna be 1000 units into $10 plus 2000 units into $20. So this means this is $50,000. Now, the overhead for material related is gonna be 100,000 is the cost divided by 50,000, which would mean that you would absorb $2 per $1 of material. And when we talk about the labor related thing, it's actually 5 labor per unit is 5 and 20. So again it's gonna be 1000 into 5 plus 2000 into 20. This is gonna be $45,000. What is it gonna be? It's gonna be $45,000. The overhead rate is gonna be 180,000 divided by 45,000. Hence $4 per $1 of labor. Now, the requirement to the question is that you need to establish the cost per unit of product B. How would you do it? Try to understand. You would simply do it like this. Basically 20 multiplied by 2 gives you 40. 20 multiplied by 4 gives you 80. So 40 plus 80 is 120. So you would be absorbing on the basis of material cost. You would be absorbing on the basis of labor cost. That's how you would be absorbing the overheads into it. So then you have got multiple questions and here we could go about doing one more question, question 41, which is, it says DRP Limited has recently introduced an ABC system. It manufactures 3 products, details of which are set out below. What are the 3 things? The product D, product R and product P. Annual production is this, batch size is this, machine setups per batch is this, so and so, so and so. Cost pools have been identified. The budgeted costs for year ending are as follows: this, this and this. It says what is the budgeted machine setup cost per unit of product R? What is the budgeted machine setup cost per unit of product R? Now, if I talk about it, I would say let's just try to understand. What is the budgeted machine setup cost per unit of product R? Try to understand this. You would say number of machine setups are needed. How would we know? We know that 100,000 units are produced. Batch size is 100. The number of setups per batch is 3. So that means what do you need? You need number of batches first. So for D, for R and for P. Number of batches. If I talk about number of batches, it's gonna be 100,000 divided by 100. So you've got 100,000 divided by 100 gives you 1000 as the number of batches. Then 100,000 divided by 50 gives you 2000 batches. Then 50,000 divided by 25 gives you 2000 batches. The number of setups are gonna be what? This multiplied by 3, this multiplied by 4, this multiplied by 6. So it's gonna be 3000, it's gonna be 8000, and this is gonna be 12,000. So hence 23,000 is what it is gonna be. What it is gonna be? 23,000. Now, what is the total machine setup cost? You would say 150,000 divided by 23,000 gives you $6.522 per setup. So when you talk about the product R, so for the product R, 6.522 multiplied by 3000 as the number of setups. So total cost is gonna be 19,565. Cost per unit is gonna be 19,565 divided by, sorry, I made a bit of a mistake. Instead of product R, I used the product D. Sorry about it. So I'm going to talk about the product R, which is 8,000. So it's 6.522 multiplied by 8,000 gives you 52,176. 52,176 divided by 100,000 units is going to be 0.52176 $. So 0.52 is gonna be your budgeted setup cost per unit of product R. So basically what have I tried to do? I've tried to discuss some questions which actually help you understand the concept of activity based costing, and from the perspective of the examination this is going to be an OTQ based area. I'll move a bit forward and I would discuss further. There are two more areas with respect to ABC that you should understand, and which is you should know what are the advantages and what are the disadvantages of activity based costing. So there is a long list. We'll have a quick go through of them so that in case if you come across an MCQ, you are able to answer that. So it says ABC has a number of advantages. What? It provides a more accurate cost per unit. So it's a more accurate cost per unit. It gives you better insights into what drives overhead cost. Because you see, at times you might be thinking on the basis of labor hour, whereas the activity of purchasing, activity of machine setup may be driving more cost. It recognizes overhead costs are not all related to production and sales volume. Yes, we do understand now there. Earlier we used to think that it's all about how many units you have produced, how many units you have sold. No, it's not like this. It's about what activities you have undertaken. So when overhead costs are significant portion, what happens is that overhead can be controlled by managing the cost drivers. It can be applied to derive realistic cost and can be applied to all overhead costs, not just production overheads. Lastly, can be used as easily in service costing as in product costing. Right? So this is what it is going to be. Now we talk about the disadvantages of activity based costing. When I talk about the disadvantages of activity based costing, let's try to understand. Just like the advantages, the disadvantages amongst them is that it requires a lot of information. Similar to this, it requires expertise. It's not easy. It requires a lot of expertise. It requires a lot of information. There are things that are needed with respect to the ABC. So it says ABC will be of limited benefit if overhead costs are primarily volume related. Furthermore, the choice of activities and cost drivers may be inappropriate. It can be more complex to explain to stakeholders, so and so, so and so. The benefits may not be able to justify the cost. So always remember that whatever that you do, it should always justify the cost benefit analysis. Whatever that you do, it should always justify the cost benefit analysis. Now, what have we done now? We have discussed the concept of this activity based costing, and this activity based costing, now you understand it's an alternate to the absorption costing, a better way to absorb the overheads. You have seen how the MCQs or the OTQs related to activity based costing need to be handled. So we have done this, one of the areas of the specialized cost and management accounting techniques with respect to the performance management syllabus, and that was the activity based costing.